As the market floundered, financial leaders were as optimistic as ever. More so. Just 5 days before the crash, Thomas Lamont, acting head of the highly conservative Morgan Bank, wrote a letter to President Hoover. The future appears brilliant. Our securities are the most desirable in the world. Charles Mitchell assured nervous investors that things have never been better.
Practically every business leader in America and banker, right around the time of 1929, saying how wonderful things were and the economy had only one way to go, and that was up.
Unfortunately, he didn't have a crystal ball to predict the future.
There's an old saying on Wall Street that the two most important emotions are fear and greed. And you go from fear to greed in about a fraction of a second. So you're very, very greedy, and you say to yourself, I want to make more. And then the market goes down 10 points, and you get frightened. I want to keep what I have, so you sell everything. And that's how you have a panic. So you can have a panic on the upside, people rushing in to get in before the train takes off, and a panic on the downside, trying to get off the train before disaster hits.
Monday, October 21st. Hoover, along with the political and financial leaders of the country, arrives in Dearborn, Michigan, to celebrate the 50th anniversary of Edison's invention of the light bulb. The host is Henry Ford. The country is reminded that in 50 short years, men like Ford, Durant, and Edison had transformed America from a third-rate power into the industrial giant of the world. And while they celebrated, their world was beginning to fall apart.
There came a Wednesday, October 23rd, when the market was a little shaky, weak. Whether this caused some spread of pessimism, one doesn't know. It certainly led a lot of people to think they should get out. And so on Thursday, October the 24th, the first Black Thursday, the market, beginning in the morning, took a terrific tumble.
The market opened in an absolutely free fall, and some people couldn't even get any bids for their shares, and it was wild panic. And an ugly crowd gathered outside the stock exchange, and it was described as making weird and threatening noises. It was indeed one of the worst days that had ever been seen down there.
There was a glimmer of hope on Black Thursday. Directly across from the New York Stock Exchange was a low, stately building, the House of Morgan. 22 years earlier, J. Pierpont Morgan had stopped the panic of 1907. October 24th, high noon. All eyes were now on acting head Thomas W. Lamont.
Tom Lamont called a number of the other bankers, like Charles Mitchell of the National City Bank, and people from the Bankers Trust, and the J. Albert Wigan of the Chase Bank, and so forth. There were about a half a dozen of them there. And they were gathered together to really discuss what they could do to stem this tremendous onslaught of selling stocks on the stock exchange that was taking place.
About 12:30, there was an announcement that this group of bankers would make available a very substantial sum to ease the credit stringency and support the market. And right after that, Dick Whitney made his famous walk across the floor of the New York Stock Exchange.
Richard Whitney, vice president of the exchange, was chosen by the bankers to be their representative. At 1:30 in the afternoon, at the height of the panic, he strode across the floor and in a loud, clear voice ordered 10,000 shares of U.S. Steel at a price considerably higher than the last bid. He then went from post to post, shouting buy orders for key stocks.
Stood up on one of the seats at the post, and he said, I give it 45 for 50,000 Standard Oil. And everybody started to applaud. Oh, the crash is over. If Morgan's putting his money in, maybe the crash is over.
And sure enough, there seemed to be evidence that the bankers had moved in to end the panic. And they did end it for that day. The market stabilized and even went up.
The New York Times said that thanks to the formation of this bankers pool, most observers felt that the panic and the great sell-off was over. And most people did feel that way. Tom Lamont felt that way.
But Monday was not good. Apparently people had thought about things over the weekend, over Sunday, and decided maybe they might be safer to get out. And then came the real crash, which was on Tuesday, when the market went down and down and down without seeming limit.
October 29th. Morgan's bankers could no longer stem the tide. It was like trying to stop Niagara Falls. Everyone wanted to sell. AT&T down 50%. RCA, once $110 a share, couldn't find buyers at $26. Blue Ridge 100 plunged to $3 and still no buyers. On the floor, they had never seen anything like it.
And it was just like a nightmare, and I couldn't believe what was going on. In those days, every buy order was on a black pad, and every sell order was on a red pad. And all I saw was members running around with a fistful of red orders, just like chickens with their head cut off. They didn't know which way to run. They were panicking, screaming. Everybody was bumping into everybody else. Oh, don't remind them. Anyhow, this is what happened, and I tell you, and I was supposed to answer. Everybody's yelling at me. I said, what am I supposed to do? I mean, nobody knew what the hell to do.
William Durant, the bull of the bulls, now tried single-handedly to support the market.